Hello and welcome to the Bankers Masterclass series on the next generation of correspondent banking in association with Deutsche Bank and SWIFT. I'm James King, the Bankers Europe editor, and I'm joined by Marc Recker, Global Head of Product, Institutional Cash Management at Deutsche Bank, and Saskia Devolder, Managing Director, Head of Western and Central Europe at SWIFT. In the second chapter of this three-part series, we will discuss some of the important work that is taking place to improve the efficiency of cross-border payments. Now, Saskia, if I can turn to you, in the domain of cross-border payments, minimizing friction, optimizing speed, and providing end-to-end transparency and predictability are vital. To this end, SWIFT has announced a new strategy with a transaction management platform at its heart. What are the drivers behind this move?
Well, first, today we see a number of competitors disintermediating the banks, offering an alternative solution towards consumers. SWIFT wants to support the banks in gaining back that market share by offering a better customer experience within the required regulatory framework. As discussed earlier, the migration to the new standard ISO 20022 will also support the banks in their compliance effort, as the compliance requirements are only increasing. And these are exclusively reserved for cross-border payments and not for domestic payments. But the consumer is expecting the same service both on the domestic and cross-border level. Today, SWIFT offers a messaging platform where for correspondent banking, the messages are exchanged from the originating bank to the intermediary bank and finally to the beneficiary bank. We want to look at end-to-end transactions, whereby all the banks in the transaction have all at the same time access to the transactional data, so they can execute all required compliance checks at the same time. Secondly, we want to focus on mutualizing more services, meaning that today, certain activities are repeated by each bank in the value chain, and we want to optimize this process.
So, Saskia, from a processing perspective, how will this be different moving forward?
Our platform, James, will enable the adoption of ISO 20022 for cross-border payments to be carried out in a smoother and less disruptive way. Based on the concept of transaction management, the platform will maintain full ISO 20022 transaction data that any authorized party in the payment chain can access. This eliminates the problem of intermediaries who breaking the chain by not passing on the complete data. Therefore, members can choose to benefit more quickly from rich data without needing to wait for all the parties in the payment chain to be ISO 20022 enabled. The platform provides coexistence till November 2025, and financial institutions can adopt ISO 20022 at their own pace. We also allow for the use of standardized APIs, both for exchanging transactions with the platform or for value-added services which can be provided by SWIFT or by a trusted third party onto the platform. We are also continuing with the further development of GPI with, for example, pre-validation capabilities so that the bank can be aware of specific compliance requirements before the transaction is sent, and so it can be executed faster. As this is only the first version of the Transaction Manager, which is scheduled for November 2022, so next year, we have already worked with the community on the priorities for the next versions, as this is a journey together to achieve cross-border account-to-account, instant and frictionless payments.
And finally, Marc, let me turn to you here and ask you, what role can big global transaction banks like Deutsche Bank play in supporting some of these changes?
Like Saskia mentioned at the end, it is a collaborative approach. For example, take Deutsche Bank. We are part of the platform user group of the transaction management platform, where we bring in especially our expertise and our view, but also our end client demand into the discussion with SWIFT. And what we have been observing since the last couple of years when we have worked so closely together on SWIFT GPI, it's really actually the community under the orchestration of SWIFT that tries to get more out of the network of correspondent banking than before. And what we see as one of the advantages of the transaction management platform is also the cost of investment. I think if there would be central utilities provided by a platform, not every bank needs to develop it on its own. Take, for example, compliance or AFC related pieces. It is obvious that the banks still are responsible, But from an infrastructure perspective, it could make perfectly sense to connect to an API to a central utility instead of building it on your own. So we see definitely there the advantage, of course, to not make unique bank developments, but to support the network, the biggest asset that we have in correspondent banking. And at the same time, really to drive the industry forward in a very efficient way from a cost perspective.
And in the next chapter of this masterclass series, we'll be looking at some of the key trends that are shaping the outlook of the correspondent banking landscape.